like to introduce you all to Herco Steyn. Herco is the Senior Fintech Specialist at the South African Reserve Bank. Today, Herco is going to be discussing Divergence or Convergence, CBDC, Stablecoins, and crypto. Herco, we're all looking very much forward to this discussion. Obviously, with no regulation currently in South Africa, this is a very important talk. So I will leave it to you to take over. Thank you for joining us.
Perfect. Thanks so much, Sonia. And just as I'm sharing my screen, I would just like to say a massive and sincere thank you. It is a massive pleasure and a privilege to be here today. So just a sincere thank you to Bitcoin Events for inviting me again to speak today. So I'll be speaking on Divergence or Convergence, CBDC, stablecoins, and crypto. Then maybe just in terms of the normal disclaimers, the opinions and views that I express today are my own, and they do not necessarily represent those of the South African Reserve Bank. And if there are members of the media who would like to quote anything I say, please feel free to get in touch, and I will gladly put you in touch with our media team. So we've got about 30 minutes, so I hope to spend about 20 minutes talking through a few slides that I've prepared. So this is broadly what I will cover today in kind of getting to this, answering the question around convergence or divergence. And then hopefully we can have about 10 minutes at the end for some robust discussion, I'm sure. So I think just in terms of the preamble, and I have to thank one of my colleagues, Hugh Campbell, for kind of putting me onto this. But so Professor Gary Gensler, the current head of the Securities and Exchange Commission in the US, he's also a professor at MIT, and he has this very interesting presentation on the essence of finance. So I'll start with that and kind of position distributed ledger technology, or DLT, kind of in terms of the traditional financial markets and the traditional structure, and then just tie that into some of the really interesting reflections that continues to pose. And then I'll tie that to the evolving DLT ecosystem, specifically focusing on crypto, stablecoins, and CBDC. And then I'll also provide a regulatory update, both in terms of what is happening more broadly internationally, and then also specifically in the South African context. So getting back to this, the kind of question that Gary Gensler asks or poses is what is the essence of finance, or what is at the heart of finance? And essentially, kind of the short answer is at the heart of finance is record keeping, or some type of ledger. And I think this is really kind of integral if you view the broader value proposition around DLT's value proposition versus the traditional financial system. So in my view, I think much of the existing financial system evolved to a large extent around kind of some type of central intermediary playing obviously a key or critical role. And I think then by extension, much of the regulatory framework that we have today is as a result of that development around some form of central intermediary, whether that's a bank or insurer, or kind of an investment company, and around that record keeping, kind of one central party taking responsibility for that. So I think that's really interesting, and I think that the kind of DLT's value proposition continues to fundamentally pose a challenge and kind of challenge this historical, almost the current conjuncture, or the events that led to us being or finding ourselves at the current conjuncture. So then I think also it makes the point that technology and finance, broadly speaking, throughout history have, for the most part, enjoyed a symbiotic relationship. And I think one of the challenges he highlights is that if technology advances at a faster pace than financial institutions, that may present a bit of a challenge, because it can introduce subjectivity, especially if kind of financial institutions have expended a lot of, I suppose, financial and resources to get the systems, etc., in the form that they are, which may kind of obviously lead to a reluctance to change and potentially missed opportunities. So I would like to just position that, and then I think also this very simplistic but most useful kind of framework for assessing the trade-offs between centralized and decentralized approaches, for lack of a kind of better explanation to this idea around this essence of finance, the ledger, and that approach to the ledger. And kind of again, just positioning DLT versus the existing framework or the historical framework. So I think in terms of decentralization, I think the more decentralized something becomes, I think there are some well recorded challenges around potential coordination and scalability, not to say that they cannot be overcome. I think it just becomes potentially more tricky or difficult. But by the same token, centralized or more centralized systems are not fully perfect potentially, as they could potentially allow for rent extraction, and they present the single point of failure. So against that background, I'd just like to discuss the evolving DLT ecosystem. And I think this, I also have to thank some of my colleagues for doing the legwork on this. So in our view, broadly speaking, if we almost can break down the 9 waves, or the 9 broadly distinct kind of developments and broader overarching developments since the release of Bitcoin and the mining of the Genesis block way back in beginning of 2009, or slightly more than 13 years ago now. So I think for the purposes of today's talk, I suppose I'd like to kind of focus wave 1, 2, 3, 4, 5 potentially. But again, I think the first point that I would like to make is that it is an evolving ecosystem. So it's not kind of just crypto. And I think today we wouldn't be talking NFTs, DeFi, etc. had it not been for kind of Bitcoin potentially in 2009. So I think that's a very useful starting point. If we kind of want to put a peg in the ground in terms of a date for the DLT ecosystem and some of the developments that have occurred since then. So I think initially when Bitcoin was first released, obviously the main value propositions, payment instrument and payment system. I think shortly after Bitcoin's release, I think the kind of narrative evolved that it's not kind of money, doesn't perform the functions of money due to its volatility, etc. Kind of challenges around scaling, etc. And I think that narrative has been exhausted or is kind of potentially quite well understood. So I think shortly after that, with Bitcoin's 10-minute block time and kind of the issues around scaling during periods of increased interest, that led to kind of slower and very expensive transactions. And I think we also saw that during the 2017 bull run. So I think the first altcoins focused on kind of improving the speed, the cost, and the efficiency of, I suppose, initially Bitcoin. But the first altcoins didn't solve for this issue around stablecoins or stability. And I think that's where stablecoins, so obviously kind of smart contract programmable money, absolutely fascinating development. And I think then by extension, subsequently, stablecoins, and I think that essentially is the tokenization of fiat. And I think crucially by non-central banks, so by private sector players tokenizing fiat currencies. And then I think subsequent to that, and I think initially around 2014, 2015, when central banks started to consider or started thinking about CBDC, etc., I think the narrative initially was it was almost in response to the crypto movement and the crypto revolution. I think that a discussion and dialogue has evolved significantly since then. But I think that is then also the tokenization of sovereign currency by central banks themselves. And I think then by extension, exploring the merit of DLT itself. And then I think some subsequent developments. So again, maybe I think whether we kind of talk crypto, stablecoin, CBDC, and whether that's retail CBDC, wholesale CBDC, potentially multi-currency, cross-border CBDC, I think it's kind of maybe the point to make for the time being is I think none of that can be viewed or discussed or kind of presented in isolation. So then just briefly on crypto, and this is kind of a standard slide I have for presentations. So just the key stats as we are speaking today. just over 18,000 crypto assets, and I think that number has more than doubled over the last 12 months. So again, I still think massive interest, etc., in kind of crypto, etc. Market cap, again, a useful metric, but admittedly imperfect metric for measuring kind of the significance of the ecosystem. Daily trading values, I think number of Bitcoin payments, again ranging. Probably ranging somewhere between 600 and 900,000 transactions per day. So again, if you think around the original value proposition of being or functioning as a payment instrument, payment system, potentially not fully delivered on that yet. And then I think, interestingly enough, so around the discussion, large number of holders holding kind of the bulk of Bitcoin. So I think to some extent there is a bit of I suppose distribution happening. So the number of Bitcoin addresses holding at least one Bitcoin, maybe approaching 1 million, might have reached that already. Again, potentially a slightly imperfect measure, as kind of people might just be hedging their bets. But I think as we are speaking today, slightly more than 13 years after the launch of Bitcoin, and I think interest in crypto is as strong as ever and continues to kind of grow. And I think that kind of begs the question, especially from a regulatory central banking perspective, is why is there such a sustained interest in crypto? And I think one of the famous quotes is around Bitcoin being a bubble, a Ponzi scheme, and an environmental disaster. And I think for all the negative press, persistent questions around market integrity, Mt. Gox, wormhole, everything in between, subsequent kind of hacks, etc., I think Bitcoin and the broader crypto market has demonstrated, I want to say, remarkable resilience. And I think something I find interesting is this website dedicated to the number of Bitcoin obituaries, currently sitting at around 445 that Bitcoin has died. So why is there such a sustained interest in crypto? So why do we see kind of this graph from 2009 to where we are currently? Why is there such a sustained interest in crypto? And I think in my mind, at least, much of it ties back to the fact that it is almost, it's an evolving ecosystem. And I think as challenges emerge, whether it's in terms of speed or cost, etc., and I think the original value proposition of crypto in terms of payment system, payment instrument, I think much has kind of been built on top of that over the last 10 years. So I think the kind of evolutionary component or nature potentially of DLT and crypto by extension is kind of quite potentially alluring. And then I think an interesting debate that is coming up internationally is at what stage would we kind of deem crypto assets to have reached the systemic significance? And if you look at the Financial Stability Board's communication around crypto over the last 5 years or so, it almost between a total market capitalization of around 230 billion to more than 2.6 trillion earlier or at the end of last year. I think it remains a kind of a bit of an open question around at which point exactly would we say crypto assets have now become systemically significant. But I do think, and I encourage everyone to have a look at it's a 2022 paper by the IMF, I think titled Crypto Connections, and it kind of makes the point that the interconnectedness between crypto assets and equity markets has increased significantly in the post-pandemic period. So I think, and even in the domestic South African context, as the Crypto Assets Regulatory Working Group, we've also discussed similarly at what kind of quantitatively identifiable point would we say that crypto assets have become kind of systemic significance. And I think in around 2018, I think we put it into one of the drafts of the earlier papers, and I think we identified a market cap of $1 trillion as being kind of a kind of significant milestone to be reached. So I just want to again maybe touch a little bit on the international regulatory challenges posed by crypto and crypto assets. So I think around data, we've got a very interesting situation or scenario where until crypto assets are appropriately and more fully regulated, it's difficult to get data around developments and retain, or for the authorities, whether it's the central banks or supervisory and regulatory authorities, to retain line of sight of developments. And I think something that continues to come up is what is the potential role that anecdotal or qualitative data may potentially play. So then obviously, given the borderless and exclusively digital nature of crypto, harmonizing data across jurisdictions is then another challenge, and that again becomes more of a challenge if you want to have or reach or attain international consistency. So also by extension, again, should jurisdictions all kind of impose regulations, it would be a massive challenge to harmonize those regulations across jurisdictions, and then a greater challenge to harmonize the implementation speed of those regulations. So essentially all of these factors contribute to create regulatory arbitrage opportunities, and I think we've seen that the ecosystem is quite good at kind of identifying and kind of focusing on such opportunities. But ultimately, we do want kind of some type of international consistency in terms of regulation in order to prevent a regulatory race to the bottom, where kind of activity and potentially less desirable activity will simply migrate to less stringently or rigorously regulated jurisdictions. So kind of international consistency across various metrics is absolutely critical. Then stablecoins, and I think in my talk last year, I think I focused very much around kind of what is money, etc., both from a legal and a social perspective. So maybe just to very briefly recap, I think central banks, governments, etc., have been clear in that crypto assets are not legal tender, or not money in the legal tender sense of the word, so not from a legal perspective as legislated in the various acts and pieces of regulation. But I think then, so I think that's quite well understood, especially kind of crypto can perform certain money-like functions, kind of based on a willing buyer, willing seller arrangement. But I think kind of so apart from kind of bridging and serving as almost a hedge against crypto asset volatility, etc., I think stablecoins potentially, and I think that's also well recorded through the Financial Stability Board and some of the more recent publications, is that stablecoins have the ability to potentially accelerate the payments use case of crypto assets. And then obviously the DeFi element as kind of bridge instrument into the world of DeFi. So I think it's an interesting question. So if a stablecoin is issued by a non kind of central bank, or potentially by a non-bank, then I think obviously it wouldn't, in terms of formal definitions or legal definitions, constitute money per se in the legal sense of the word. But I think, and this is an evolving and emerging narrative, is I think it's very much starting to look money-like. And I think that money-like attribute is posing some really interesting questions for authorities globally. So just very briefly, I think in the 2 years from January 2020 to January 2022, stablecoins in issuance probably has grown by around 2,600%, and I believe this figure is also outdated and quite fast approaching $200 billion as we are speaking. So just to note the continued and massive growth in stablecoins. So I think just very briefly on stablecoins, I think maybe just the main takeaway from this slide is all stablecoins are created to be stable, but not all of them are created equal. And there are a range of features and design options that will influence the stability and subsequent risk associated with a stablecoin. So I think, again, this is where it gets really interesting in terms of if you think who should be allowed to issue what. We are following the developments globally quite closely, and I think in terms of what is coming out of the US and initial recommendations from the Presidential Working Group around stablecoin issuers needing to be a depository or an insured depository institution. I think that is where it is really interesting. I see we're running out of time a little bit, so I would like to kind of maybe just skip over some of the kind of stablecoin slides. I think that this was mostly for information. Very briefly on CBDC. So just according to the IMF and a recent paper they released, 68 countries globally are working on CBDC research or proof of concepts. 13 countries are testing pilots, and then 2 countries have launched official CBDCs. So then again, the SARB in South Africa, the South African Reserve Bank, is very actively researching the broader developments and area of CBDC. So we are currently busy with our retail CBDC feasibility study. Also on the retail side, then also Project Korka 2 is the second iteration of exploring CBDC from a wholesale perspective. And I think the Project Korka 2 report is due to be released on the 6th of April, so please do look out for that. I think that will be highly insightful. And then also the South African Reserve Bank is part of Project Dunbar, which is an initiative on multi-currency CBDC. And that project is due to conclude at the end of March, and that press release and the project report should be released in next week, I believe. So please also do look out for that fascinating insights from a multi-currency, multilateral perspective in the context of CBDC exploration. And then just very briefly in terms of regulatory update. So I think in 2019, when then Libra announced, then Facebook announced, then Libra, now Meta and Deem, I think that prompted some interesting reflection from an international perspective. So the G20 in 2020 prioritized increasing or enhancing the effectiveness and efficiency of global cross-border payments. So through the Financial Stability Board, the CPMI, and the BIS, or the Bank for International Settlements, they came up with 19 building blocks on how to deliver on this kind of piece of work or mandate around increasing global cross-border payments. And the two ones, or the ones I would like to draw your attention to, would be 18 and 19. And that is very much around fostering the soundness of global stablecoins, and then also factoring in international dimension into CBDC designs and arrangements. So I think just in terms of the international regulatory focus areas, very much kind of renewed interest in my view over the last 12 months in crypto, and then by extension stablecoin regulation. I think then in terms of harmonization challenges, data gaps, and DeFi, I think massive focus areas. And I think also I think we're seeing almost all the international organizations increasingly focusing on crypto, stablecoin, CBDC, and kind of associated developments. Just very briefly in terms of the domestic regulatory developments and an update on that. So the 3 areas that the core working group position paper, or the Crypto Assets Regulatory Working Group, positioned under the Intergovernmental Fintech Working Group, the 25 recommendations that are covered in the core working group's June 2021 position paper around AML CFT. That work is ongoing, and we hope that that will be finalized within the course of 2022. Similarly, with the exchange, or the amendment of the exchange control regulations, that work is also ongoing. And we do hope that that will be finalized as a matter of priority, and it is indeed a massive priority. And then I think also from the Financial Sector Conduct Authority's side, in terms of the draft declaration of crypto assets as a financial product under the Financial Advisory and Intermediary Services Act, the industry has provided comments, etc. So that is currently being considered by the FSCA, and hopefully within the next few weeks there will also be an update forthcoming from them. Then I think we hope to have an industry engagement specifically led by the Financial Intelligence Center on the AML CFT component of the proposed kind of framework for regulating crypto assets from an AML CFT perspective, and then also from an exchange control perspective as led by the SARB's Financial Surveillance Department. So we hope to have that engagement during the course of May. If you would like to have updates on that, please do register on the IFWG website, and you will get a notification as soon as that has been confirmed and finalized. Then just in terms of stablecoin regulation, that is indeed a priority for the core working group in 2022, and we'll be doing a functional and use case mapping exercise to the existing position paper and use cases identified, with a view to just ascertain whether the existing recommendations and use cases appropriately cover for stablecoin regulation, and if there may be any potential gaps. And then just looking further ahead, the BCBS has issued a prudential framework for or a consultation paper on the prudential considerations for prudentially regulated financial institutions, and that should also be finalized during the course of 2022. And I think in the interest of time, to answer the question, divergence or convergence, CBDC, stablecoins, crypto, in my mind, again, just the issue around, I think it's very difficult, and it is becoming increasingly difficult to talk kind of crypto without talking smart contract functionality, potentially kind of stable coins and CBDC. So I think as soon as we start talking one of the three topics, we inevitably get to further topics around that. So I think that is essentially I think in a nutshell. I think I've pretty much said my piece. Let me quickly jump off and see which questions may be in the chat, and very happy to take them. And again, thanks so much for the opportunity. Let me stop sharing. Let me see the discussion. Okay. Let me see if I can start at the top. Will I be sharing the slides? Yes, I'm pretty sure we will be able to share the slides. Why distinguish between retail from wholesale CBDCs? So I think that's quite a well kind of traversed topic, but I suppose if you look at kind of the CBDC exploration, I suppose the considerations around issuing a retail CBDC, which would essentially be available to all individuals within a country. So that would, in terms of scope, implications, etc., be more wide-ranging. But I think in terms of wholesale CBDC, I think that may potentially be explored within a more or slightly more controlled environment, where the central bank could explore issuing CBDC according to some type of tiered structure, just to initially kind of, as we explored in Project Coca 1, just to a smaller group of kind of approved, almost licensed intermediaries, so to speak. So I'd encourage you to maybe have a look at the Project Coca 1 report that is available, and then in about 3 weeks' time, the Project Coca 2 report will be out, and I think that distinguishes quite nicely between kind of the retail, wholesale, and then again in the context of Project Dunbar, which considers multi-currency, multilateral CBDC. I think that should position that quite nicely, I think. Can you speak to the matter of central banks monitoring an individual transaction and the ability to promote, penalize certain demographic groups in the country with preferred rates, access to CBDC? So in short, let me, I think I very briefly touched on the design options around stablecoins, and I think the different permutations, the different metrics, etc., that one can potentially select when designing a stablecoin. I think in the case of CBDC, the design options and permutations are even more. So there's potentially a very broad continuum around what privacy kind of metrics you would want to or could want to impose in terms of a potential retail CBDC. So so that is an ongoing consideration, and I think that is quite crucial, is around privacy, etc. And again, depending on the design options, that can be kind of mediated. Sonia, I see you are on screen. Should I stop there? Shall I maybe just quickly answer the last one, or shall I stop there?
Yes, please continue. Please do the last question, and then we'll do the close.
Right. So Yeah, so and I think again that question is a very good one. If CBDCs are issued by banks, would that then hurt the deposits by commercial banks? So again, that again ties back to the question around the design elements, options selected, kind of the implementation model, etc. So that's really an incredibly vast. Kind of the options are essentially endless. So. So I think obviously those are some of the very key considerations that requires very, very careful consideration. I see there are a few more questions, but Sonia, I think let me perhaps stop there in the interest of time. And again, thanks so much and apologies for going slightly over time.
Thank you so much, Herco. That was so interesting. Fascinating as always to have a representative from the South African Reserve Bank with us. I think this is the 8th year that we've had you and your colleagues share your insights, so we really appreciate your time. Obviously it's very important that we have these discussions. The businesses in South Africa need clarity on where the regulation is going and to prepare for that essentially as well. We look forward to clarity and regulation this year. I believe that we might have some regulation coming out in 2022. So that's fantastic. Thank you for your efforts in this regard as well. And thank you for joining us today, Herco. All the best. Thank you.
Thanks so much, Sonia. Thank you. Goodbye.